My name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the hour is the man known as Uncommon Yield to his parents, whose first name is David. David, I know you want to stay somewhat on the anonymous side, but you and I have interacted a little bit over the last several months. Introduce yourself to the audience here. Who are you? How'd you get involved interested in markets? And what in the world is Cash Flow University?
Yeah, sure. I really appreciate you having me on, Michael. I think few will really understand how big an opportunity this is. My name's David. Been known on Twitter as Uncommon Yield, and really became active on Twitter like a lot of people during the pandemic. I was looking for something to do. I'm a dad of young kids, and it just was kind of an outlet for me intellectually to really kind of start to get involved and share what little bit I know and kind of what my viewpoints in the markets are. And I think, just like Cashflow University, that's just like something that I'm involved in. It's a Discord group where we teach people how to, make money outside of their 9 to 5. So whether that be options, if you want to learn how to sell Turo, do rentals, be in crypto, whatever. That's just something that we offer out there for folks to learn. But yeah, I really appreciate you having me on, Michael.
All right, so let's get into what uncommon yield is to you. So most people think about yield; they think about pure dividends, straight up buy and hold, and they think about bonds. What exactly is uncommon yield?
So for me, I like to try to take a little bit of a contrarian take on the market. I think that's probably why I really enjoy your content, Michael. Is I think you take a unique view on the market. It's not like, hey, let's just buy index funds and buy them forever and not take any critical thinking whatsoever and just being index fund investors. But that's fine. It's a fine strategy, but I wanted to think about it differently. So during the COVID crash, and we'll talk about this a little bit more here and kind of what's going on with the banking sector and why I think self-sovereign money is important, but interest rates went to zero. So I was like, hey, I was sitting on a lot of cash. I didn't know what to do. I have some means, but not tons. And like, what do I do with all this cash I have on hand? So I started like looking around different opportunities to invest in. Bonds are zero, bank accounts are zero, money markets are zero. I found a couple of different opportunities, started to get involved in crypto quite a bit. Started to learn about things like cash value life insurance, which I know probably a lot of people super hate. I have a very, very specific view on that, and I do own a little bit. I think most of it is complete junk, but if you do it right, I think it's pretty cool. And I think it's just trying to find yield in different ways. So it could be those things I mentioned, could be stuff like selling options to create a little bit more yield on the securities you do have or the cash you do have, and not just taking that common way of gaining interest by just having it in a bank account, holding dividends, like you said, and so forth.
The thing that takes me back to, and I know this is not what you're trying to obviously do, but one of the things that I thought was kind of uncommon yield 2 years ago were all these crypto schemes that would claim to give you 10% yield based on staking and whatever it is. And I can't tell you how many people I heard and talked to about this stuff. And me, as just a very basic thinker, said to myself, this is literally impossible. There's some shenanigans going on, right?
Sure.
But it's funny because people still fell for this stuff, right? So talk about sort of if we're going to be talking about how to generate income in non-traditional ways, let's first distinguish between what's legitimate ways versus non-legitimate ways of getting uncommon yield.
Yeah. So, I think a legitimate way would be actually, like lending money in a way that would make sense, right? That would be a legitimate way to do it. Writing options, that's a legitimate way to do it. Owning maybe some higher risk bonds, that's a legitimate way to do it. Dividends, legitimate way to do it. Owning real estate, that's legitimate. There's lots of ways that are legitimate, and then there's some things that are super sketchy, like you mentioned, like in the crypto markets, which I'll be honest, like I was super excited about for a long time, and that all fell to pieces very quickly. In recent history, a lot of folks got caught up into it, which is really too bad.
And I am curious because it is interesting to me. If you kind of go back to that period of 2 years ago, why was it that it seemed so popular? Is it just a function of it sounds like a great number and crypto's hot? Presumably there were some people doing some very serious due diligence that got fooled for this.
Yeah, I think there was an actual real business behind a lot of it. So let's say, for example, like you're somebody that bought Bitcoin back in 2014. Obviously, it's like skyrocketed since then. You had tons of unrealized gains, which would be very expensive from a tax standpoint if you were to sell that Bitcoin now. So you could go to somebody like a BlockFi, and that's how they started. And you could say, all right, BlockFi, I would like to take a loan out against my Bitcoin. I think it's going to continue to go up. I'm going to pay you 9, 10, 12% to be able to do that. And they would, to do that, you had to give an over collateralized loan, meaning like, all right, BlockFi is like, I'll give you that loan, Michael, but you need to give me 2x the Bitcoin of the amount of dollars I'm going to give you back. So I can be whole and I can close out that loan at any time for like a margin loan if things go south. Where things got really weird is uh, so much money came into the space because people were looking for yield, right? Bank accounts that were yielding before the COVID crash, yielding 2-3%, all of a sudden yielded nothing. So the appeal of making 8 to 10 to 12% was very attractive. It was a risk people were willing to take. There's a lot of like legitimate businesses in the space too. They got totally hosed, like Galaxy Digital. They're a Canadian trading company. They're the parent company of like the Grayscale Trust for crypto, and I think there are a lot, and there are big players in the game that were promoting it too. So it made it seem safe. Kevin O'Leary was out there saying like, "Hey, this is safe. I lend on FTX. You can do this too." So yeah, I mean, I think it was one of those things where you had the right people saying that yes, this was a good idea. In the current interest rate environment, you couldn't find that yield anywhere else, and it was easy to fall down that rabbit hole, and well, not the rabbit hole, but it's easy to fall down into that trap and get totally stuck there. But there are definitely holes that started to become apparent. I started warning people, I think, in June of last year, saying like, hey, like some of this stuff isn't quite right. There's some stuff with specifically like Celsius. Like they were one of the first ones to explode, where their person that was running their lending desk was a 24-year-old lady that didn't have any financial experience whatsoever, and she was handling billions of dollars. It's like, oh, no, this is not good. I'm out. Told everybody I could, and then so subsequently, more and more funds kind of fell from there. We can talk about details if you want, but it was just like a cascade events of just bad loans that were in the system.
By the way, I love that point about how a warning sign was the age of risk managers, right? Which is
Yeah.
something you never really. But I really do think that there's something to that, right? It's like if you when you're younger, you can talk about risk and do spreadsheets from here to tomorrow, but only with experience can you understand just how serious it can be, right? Living it, which only comes through time. And I'm always amazed. It's like when you look back at that period, it's like that was the blow off top for ZERP, for zero interest rate policy. It got to this point where some of this yield stuff was so silly. It's like that had to be the end of zero interest rates just based on the money that was flowing into pure story yield as opposed to real strategies generating yield.
Yeah, 100%, 100%. And you had like stuff blow up, like Terra Luna kind of blew up around that time, like that was big. That was obviously a algorithmic stablecoin that just couldn't keep it together. Just lots of big blows over and over again. I can't remember the crypto hedge fund that went bust, but there's a big crypto hedge fund that went bust. They apparently had unsecured loans to Galaxy Digital, Voyager, who went up, BlockFi, I mean, everybody. And it just, yeah, it was an amazing amount of lack of due diligence in the space compared to what those companies were presenting to folks that were putting funds there. Pretty amazing.
When you were trying to sound the warning bells a little bit on this, were you getting a lot of pushback? Were people saying, what are you talking about? This yield, I'm getting it, so it must be real. What was some of the feedback that you've gotten?
Yeah, I mean, I think there's just folks who got really excited about it, and they didn't want that party to end, So, and I was a big proponent of it too. So it's like, hey, like why the big about face? And I was like, well, I try to be as honest as I can with the folks that follow me. I'm imperfect. I'm not perfect. But if I do make a decision and change, especially for a product that I was excited about, service that I used and did talk about a lot, I want people to know. So yeah, I think people were just in denial. It's like, oh, this is 100% real. There's all these legitimate things that they're showing on their website. And it's like, yeah, I kind of don't care. One of the things that has kind of served me well in crypto, Michael, is that if there's fire or there's smoke in crypto at all, if there is any smoke around any project, there is a fire, 100%. It's so easy to run a scam in crypto. I mean, there's tons of scams in traditional finance as well, right? I mean, there's Bernie Madoff, right? We could talk about some of the banking stuff going on. There's lots of scams going on in traditional finance, but in crypto, anybody can spin things up so fast. It moves the speed of light. And if something looks wrong, if something feels wrong in crypto, it's probably bad, and you should probably run it super far away.
Yeah, I think the look, there's no doubt, right? I mean, it's like I always see people say with my criticisms around crypto, they say, "Oh, this is just TradFi, nonsense and FUD." And it's like, well, at least with TradFi, I know who to sue, right? I mean, I
Right?
think there is an no, no, really, I'm
Yeah,
actually
yeah,
sincere about it because there is that is like
yeah,
okay, obviously you can sue the exchanges and sell, and this regulation that comes afterwards, but for some of the stuff that really is decentralized that generates some kind of yield, however it's being done. I mean, and they're outside of our borders, all this stuff. It seems like that's a real stopping point for anybody that's just conservative enough with how they manage their money. You need to have somebody to sue sometimes.
yeah, yeah, 100%. I think that's a really fair point.
Okay, so you're still doing the crypto side. Presumably, you've traded through the bear market. First of all, let's talk about the again uncommon ways of generating yield that's legitimate when it comes to the crypto
Hmm.
space. Right, I'm sure there are strategies that you yourself are doing.
Hmm.
What are some of the things that you have uh, done to try to generate some income from your crypto trades and investments in what's been a very volatile last couple of years?
Yeah, great question. So there are like legitimate projects out there, I mean, just some that I'm involved in. Like I do mine some Bitcoin with a third party. I'm not going to mention the third party because I think they've screwed over a lot of people, unfortunately, and I don't want anybody else to use them. But I do mine some Bitcoin with a third party. I mean, that's a legitimate way to do it. You're taking energy, you're using a computer, and you're you know for posting new transactions onto the blockchain, you get a reward. I also run nodes. So a couple of the projects that I really like and I'm so excited about. One is Flux. So they're kind of like a decentralized Amazon Web Services is kind of to think about it. So they on their network, people run nodes for Flux, and then they have other applications that you can run on top of it. So, like you can run a pre-search node, Firo, and a bunch of other nodes out there. Actually, you can run like Minecraft servers out there. Soon you'll be able to host WordPress servers. Actually, no, that is live. You can host WordPress servers on Flex. There's just another option of like a decentralized way to run your website to or run potentially other nodes in crypto space. So I think that's an exciting project. I think it's real. There is that's a docs team, for example. Like Daniel Kellerman um, is the CEO of Flux. He's out there really active on Twitter is Backflux, and Discord's very active. Everybody on the team is doxed. I'm not, but they are, right. So you can go and you can kind of see what they're going on. I think that's an important one. Staked Ethereum, Coinbase. I think that's. We'll see if that continues to be the case. We'll see what happens with the SEC on Coinbase, but I've done that. I'm doing that some. And then some other like smaller nodes, like Presearch is one that I'm doing. They're like a decentralized search engine that's private. So Google's great. Google does a really good job as search, but Google's not inherently private. Presearch is inherently private. Like they don't store any of your information. They use nodes to run their search query. So I think those are the few ways that I'm doing it right now.
But presumably you're doing more than just that, right? I mean, you're also, I'm assuming, doing more traditional investing alongside the crypto side.
Oh, 100%. Yeah. So, I mean, I have like basic like stocks and ETFs. I trade a lot of, I sell a lot of options. I shouldn't say trade options. I sell a lot of options on big ETFs like QQQ, IWM, TLT. Yeah. So I have a small amount of cash value life insurance, which we can talk about. That's kind of like a rabbit hole if you want to go down, but that's a big one. There's lots of different reasons I have that. But those are like some of the other ways that I'm getting yield right now.
How do you view the constant point that Bitcoin and cryptocurrencies that they basically just trade like the NASDAQ, that they're just correlated?
Yeah.
There's no real sort of diversification benefits between the two if they're acting the same. How do you think about that?
I think right now it's true, and it'll be true until it's not. I mean, it is a risk asset, right? I think it's a place that we had a bunch of liquidity coming in the system from a with all the stimulus and all the quantitative easing, like that was a place that stuff went. People were speculative, and and it went there. Um, I think about Bitcoin and specifically is kind of insurance is the best way to think about it. It's insurance that the current monetary system will fail. Now, will it be perfect insurance? I don't know. We don't know unless the current monetary system fails. But if it's there and if it's legitimate and if it's ends up being good insurance, I'm going to be happy that I have a few, more than a few percent, about I think I have about 7.5% of my portfolio in Bitcoin. That I'll be able to hopefully weather that storm. Just like how folks think about gold. Like gold doesn't necessarily always trade perfectly, but at times of risk, it is like a flight to safety. So will that be the case in the future? I don't know. I think it's hard to know. It hasn't acted as such, but I think that's like Greg Foss. He's really good. Follow on Twitter. He's a bond trader. He might be really interested to have on. Michael, you guys could talk way more technical details about that side of the world than I could. That's how I thought about it.
Yeah, I've had Greg Foss on before, so I do think that the argument around insurance is interesting. I mean, despite all my countering of narratives around store value, terminology, inflation hedge, like I get the counterparty argument. Like that one, okay, that makes more sense to me. Now, the challenge I think though is that okay, so if you're going to view it as insurance, but that insurance ends up having some massive gains, now it becomes a bigger and bigger portion of your portfolio, right? So, in other words, do you where I'm going with this is do you rebalance if you're viewing it as insurance? Because if it's insurance, that means that you really shouldn't rebalance, right? Because presumably the bigger it gets, the more likely you have to that end game of the financial system reset.
Yeah. So like for me and the way that I thought about it personally, I think it's a really fair point that you're making. The way that I thought about it personally for me is I'm just going to let it grow. I'm going to put it there and let it grow. If it goes to zero, it won't kill me. If it does what I think it'll do and 50x from here, then I think then I'll be very happy that I didn't sell any. So that's really how I thought about it. I don't really like rebalance it. I just dollar cost average in a modest amount every day and just kind of see what happens from there. Yeah, I mean, I think you're going to have to see a collapse of the U.S. dollar, which is going to be really terrible and really messy. I think if that happens, it's like one of those things where I kind of hope I'm somewhat wrong because that would be so catastrophic and we can't predict it. When you look at the places where Bitcoin is being used in commerce, like certain places in Central and South America, places over in Africa, it's where their currency is really poor, right? They don't have a way to really reliably transact in their own currency. Bitcoin, even though it is volatile, it is in a sense more stable. So until that ends up being the case, I think we're gonna be pricing Bitcoin in dollars. Like Balaji, he's been stirring up the hornet's nest, on Twitter. Recently he made like the bit signal bet where he said, hey, in the next 90 days, Bitcoin's going to go to $1 million. His thesis is that that won't be because Bitcoin will be worth so much more. It'll be because the dollars are worth so far little, which I don't know. Seems kind of crazy to me. I understand his reasoning, and I've looked into it quite a bit, and we can talk about it. But I mean, I think it would be some type of like big like credit event for the U.S. dollar where it's not only not the world reserve currency, but it's not really even like relevant or trusted currency anymore. Yeah, I'd be really curious, Michael. Like, what do you? I mean, like putting Bitcoin aside, like, what do you think about the argument for gold? In that case, do you think that's a legitimate thing?
I always view things less from the standpoint of the kind of doom and gloom of a financial system reset, which I'm in agreement is going to happen at some point, but I hope it doesn't happen in my lifetime because it'll be very painful, right? Yeah. I always go back to sort of more what is the purest definition of the market? Purest definition of the market is all assets, right? So gold is a part of that. Bitcoin's a part of that. Some cryptocurrencies are part of that. Some are not. They're not
Mm-hmm.
real legitimate assets, right?
Mm-hmm.
If you view trust as an asset, which you can argue it is, certainly in business, right, which is what Bitcoin is really ultimately about. But I always I struggle with like these forecasts of $1 million in Bitcoin, the dollar's going to be worthless. The problem that I have with this is that I think it doesn't seem to fully factor into the idea that, okay, so if you're going to inflate away all of this debt to make the dollar worthless, you're going to have a couple of banking crises, which would be deflation shocks like what we're seeing now, right?
Mm-hmm.
So the Fed hikes rate, destroys the safe collateral to counter the inflation. You can't keep on doing that because it destroys the mechanism through which capital flows, which is the entire banking sector. So you end up having this kind of stop and start to the end of the world, which makes it hard for the real maximalists, in my view, to ultimately get it right. I could be totally wrong on that. That's not to say I don't believe one shouldn't have Bitcoin. That's why I go back to that rebalancing question. If it's insurance, that's a different type of viewpoint. If it's an asset, that's a different kind of viewpoint. And those viewpoints dictate the weighting.
Yeah, I think it's really fair. I think it's really fair. Yeah, I really hope it. I really hope we don't see the end of the dollar in our lifetime. I think about all the folks it would impact. I think it would just be incredibly tragic. So one of those things I hope is.
Yeah, no, no. Oftentimes I listen to the way people frame things, and it's like it's like the person who's making these outlandish, or maybe not so outlandish statements. It's like you realize what that actually means for your life, right? Never mind, society, like you as an individual, as a sovereign person, right?
Mm-hmm.
Now let's talk about this. I call it a manufactured bank crisis, not to sound conspiratorial, but
Mm-hmm.
I put out that tweet before. I said, how do you in a pre-election year, how do you push stimulus out in high inflation, right, with a banking crisis? And you've seen what's happened to the
Mm-hmm.
balance sheet, the last 2-3 weeks for the Federal Reserve. And I remember I did a podcast and I said, this is like a Bitcoin maxi's wet dream, because this is ultimately all about counterparty risk, right?
Yeah.
And you saw that, right? Bitcoin had a big move. Now, the problem, though, is that I think a lot of people are on the train now that Bitcoin's going to make new highs because this is the ultimate catalyst. This is what Satoshi was basically created the code for. But the problem is now you also have these counter dynamics like the SEC still going after some of these crypto exchanges and causing fear around the space. So how do you think about kind of where we are in terms of the price reaction by Bitcoin to the regional bank problems we're seeing? And I wonder if you think it's maybe a little bit too much excitement when it comes to the Bitcoin movement just recently.
I mean, I personally do think it's a little bit over exuberant. Obviously as a holder, it's hard not to be happy when the price goes up, right? I still denominate things in fiat in my own head, so I haven't made quite that transition yet. But yeah, I think it is very overdone. I think it's really interesting, like your point of like this being like a manufactured like crisis by the Fed. It's pretty obvious to see like what would happen as banks bought long dated treasuries. The interest rates go up. They can't cover that hole in their balance sheet easily after buying all those long dated bonds. So yeah, I think you hit the nail on the head. I think it's very manufactured. I think there's a reason why when they opened that lending program where the banks can go and they can take out loans to cover their losses and be able to get a loan at par for bonds, makes a lot of sense. It's only for a year, right? I mean, I really think if treasury or if the U.S. dollar isn't going to go away, really the play like long term is going to the play at least short term is going to be long dated treasuries. And like looking at your fund allocations, I think you would probably agree that the Fed has to cut rates. They can't keep them this elevated this long. The banks can't handle it unless they just want the big.
So isn't that exactly what Bitcoin is really competing against? It's
Yeah.
treasuries. I mean, if again going back to this about counterparty risk, right? So why does the flight to safety trade exist? Because credit spreads blow out in high volatility. Money says I want to go into the safest part of the bond market, which is government debt, because government owns us through taxation. So I mean, at the end of the day, isn't that really at the core of what the real battle is? It's not necessarily Bitcoin against the dollar from a currency perspective. It's about Bitcoin against another party that can not go default.
Yeah, I guess it depends on what if you think at what rate can the government continue to tax, right? And what the country can bear. It's probably a lot more than what we think, and that's why I think the reaction is so overdone. I mean, look at Japan. Japan's been doing it forever. You would think that they would have failed a long time ago, but they're still going. But yeah, I mean, I guess I still think about it as an insurance standpoint. I understand what you're saying from a flight to safety. It's definitely not that yet. Could it be? Maybe, but it's definitely not there yet. It's not mature enough yet. enough people don't hold it. It's not accessible enough. And really, like the SEC has made it very clear over the last couple of weeks with Silvergate being shut down. What was the other bank? Shoot, I'm like blanking the other one in New York, where they pretty much just killed. That were crypto friendly. Like they're not down with it. They want crypto to die. So yeah, I mean they want to force everybody in treasuries. They don't want that to be the trade. But I don't think we're anywhere close to being the trade, Michael, from my perspective.
Okay, so we we agree it's manufactured, right? However we want to define that. Some people will think it's conspiratorial, but I keep going back to you can clearly see that Silicon Valley Bank was known to be mismanaged for a long time, way before the Fed started hiking rates. Okay, so you've got this dynamic. They plugged the hole, at least seemingly for now. The bears are going to argue, and I've seen those that will insult me about my melt-up thesis this year. They'll say, well, this stuff acts with lag. And my response is, yeah, but not that long, right? So there are lags, and then there are new catalysts. Now, I happen to think that if you're going to have some kind of a real credit event, it probably comes from something else. Maybe it's commercial real estate. Gary, actually, I'd be curious to hear your thoughts on that too. But do you think we're in an environment that people are ascribing too much of a potential downwave to the banks as opposed to a number of other risks that have been building for a while? Because that to me is really sort of where I think it can get really ugly later in the year.
Yeah, it's going to be really hard. I mean, we're in a really precarious environment. I mean, things really tend to break when interest rates go from 0 to 5% all over the place. There's a lot of companies that are profitable. Like if you look like the Russell 2000, like there's some ridiculous percentage that are not profitable. Now maybe that's just accounting tricks, but there's a lot there that are probably not profitable, right? I think that could be. I think real estate in general could definitely break. Something I think we'll learn here in the summer what's going on with the real estate market. Folks will be buying and selling houses because they're moving, trying to get into where they want to live, especially if they have a family, so their kids can start school at the right time. I think that's a residential real estate. I think it'll be really interesting to see what happens there. Commercial real estate, I don't know how attractive a 5 cap is right now when you can buy treasuries and make that same rate without any risk. It seems like a no-brainer to me right now. I mean, I think one of the things that's really interesting, and I don't know, I mean, maybe you talked about this other spaces, and it's just is right now, like I don't know, you can make so much more in just short-dated treasuries than putting your money in the bank. Will we continue to see outflows from the bank? And if we continue to see outflows from the banks, how do they react? How does the Fed react? Is that they continue to have the same stance? Will their measures they have continue to work? I don't know. I hope so, but I think those are the few things that I'm really watching is bank deposits. Do they continue to go down? And then residential and commercial real estate.
Yeah, yeah, and by the way, I will say like I've made that point before. It's like on that point, yeah, you can get listen at Chase, you don't get any interest for a savings account. I mean, it's beyond absurd, right? So there are a lot of banks where they claim to give you a savings rate, but it's nowhere near what the T-bill is. So it is an interesting dynamic. It's like I don't know if people are just being lazy, not realizing it, and by people I mean non-financial people, not aware of what rates they can get, or it's laziness, whatever it is. But that dynamic of sort of what the banks are offering versus what the government's offering is pretty remarkable as a spread. Let's talk about again some of the other things that you're doing on the or sort of yield side of things. Any particular focus on a certain style of options trading in a particular sectors, industries? There are these interesting products that are coming out that have like insane yield on, for example, a Tesla stock because they're doing options strategies trying to play the volatility of it. Anything that you've been doing for yourself that's sort of more on the esoteric but kind of interesting side?
Yeah, I think there are a couple of things. So one, just I'm just selling a lot of cash secure puts. No idea what the market's going to do. It seems like we're pretty toppy right now. Everything seems a little precarious. Maybe that's just the inner bear in me, I guess. But I'm doing a lot of that. So selling a lot of options on TLT. Premiums are pretty good. I personally try to stick to the big indexes. when I do trade options, so TLT, IDOM, QQQ, IYR. That's kind of what I try to stick to. The other thing I've started to play around a little with it a little bit is there's a kind of a this is something that was like really popular on Twitter, and I started just like a really small part of my portfolio in it. It's called the Hedge Fundies Excellent Adventure. So essentially, it's a hedge fund type play, but you use UPRO, which is you know a leveraged version of the S&P 500, and then TMF, which is leveraged long duration bonds, and you use that in tandem. So in like a traditional like 60-40 portfolio. But with that extra leverage. So those are a couple of things I'm starting to try because I mean bonds. Anybody that's followed me for any length of time knows that I trash bonds like crazy when interest rates are zero. I just talked about it like crazy. Just how bad of an investment bonds were. I mean, I think bonds are a really interesting play, especially long duration bonds. I think they can have a really important part of your portfolio. And that's like one of the kind of the unique things I'm doing. I don't know if you've heard of that or if that's interesting at all, but those are the two things I'm doing quite a bit of right now.
By the way, I don't disagree on the in quotes toppy part. Again, people don't seem to understand. I'm talking about different time frames, right? So March has been volatile, which was my expectation in February. I made that very clear before all this happened. I didn't think it would be a regional banking crisis, but the conditions were there, and the signals that I'm tracking, are pretty much all saying volatility probably continues in April. But historically, if you have high volatility in 1 month without a clear direction, the next month ends up being more of a capitulatory type of move. So maybe April ends up being, as I've been kind of alluding to, more about direction. Which is interesting because April also tends to be among the stronger months in the year, especially during the best 6 month period. But yeah, I don't know. I'm with you. I think there's a lot of mixed dynamics. It's very easy to make a very, very strong bearish argument, but the market doesn't seem to care about what the bears have been thinking. And the truth is, we have been going sideways for a while. Nice move off of the October low, but this has been frustrating everybody, I'd argue.
Yeah, it's really hard to project like where it's gonna end. When will like rationality actually come to bear? I mean, even like traditional metrics like the Shiller PE are still high. We still looks like we have a lot more room like downside to go. But I don't know. There's a lot more money printing now, right? I mean, the Fed with their new program, they just did away with what like half of the QT that they did just like overnight, pretty much. It's like gone. So yeah, like lots of liquidity injection in the system. It's causing a lot of really weird dynamics as always. So
do you find that you feel this urge to trade more often when you're in these kind of environments versus have a longer term outlook? So take the crypto part of it out of it.
sure. Sure.
I do think there's a correlation between headline anxiety and turnover.
Yeah, I mean, I definitely do. If I'm honest, options I typically tend to trade weekly, like right now, and that's just kind of like a pattern that I've gotten into and something that I've gotten used to over the last like few months. I used to do it more further out, like around 35, 42 days, and really let that theta decay work for me. But I don't like to have a position open for too long. And I think that has really increased my trading frequency for sure.
With the people that you're contributing with, I'm curious. Do you kind of coordinate and give ideas out, to other writers on Cashflow University? Are there kind of active debate, or are you pretty much doing your own thing, putting your own content out, and everybody else kind of does their own thing?
Yeah, I would say we pretty much are doing a lot of our own thing and just kind of sharing what trades we're making in the Discord. We have a few folks that are really into technical analysis, and they just kind of share what they're doing from that standpoint. We have folks that are doing like short-term rentals and long-term rentals, so they share what they're doing right now in the market, how they're viewing it, kind of how to get started there. We have a guy that does Turo. Obviously, I do crypto, so yeah, we all kind of do our own thing, Michael, and we share kind of in our areas of expertise and just answer whatever questions folks have. But we're just mostly sharing a lot of what we're specifically doing and helping folks if they want to learn how to trade options. Like, this is kind of the mechanics of it. These are the things that we look at, and how we trade it.
For whatever it's worth, I always find Discord to be a kind of fascinating avenue through which people are learning about trading and investing. Am I wrong in the cynical view that there's a lot of just finance tech bros on Discord, for lack of a better way of saying it? That the audience is kind of very much younger, not necessarily as experienced on investing, and there to be kind of more of an echo chamber, or is that just a mistaken notion on my end?
It can be, I think you have to watch who you're following, on what groups you're getting into in Discord, and even who you're following on Twitter. I mean, like I saw a tweet that somebody said the other day. It's like I'd rather make $10 or $1,000 a month passive than $10,000 a month active. And I was like, tell me you don't have a family without telling me you don't have a family. It's like, come on, man. Like, there's just a lot of really stupid stuff that people say. Out there. So you just gotta vet folks on the content that they put out on a reasonable basis. Everybody gets stuff wrong, but are you trying to put good facts out there? Are you trying to educate people in an honest way, and be humble, like when you're wrong, because everybody gets it wrong.
Easier said than done.
Yeah,
I think in general,
absolutely.
when it comes to this stuff, right? It's like, and it's like, yeah, of course everybody gets it wrong, but there's some processes that are clearly more wrong than others,
For
right? I
sure.
mean,
Yeah.
conclusion can often be wrong, but the process is the key.
Yeah, I mean, if somebody's saying like, "Hey, like you're going to make like 10% a month," I mean, that's ridiculous, right? Like we're selling options, and we're like, "All right, well, we're trying to make like a half to 1.5% per trade." That's not like super aggressive. We're trying to be around like the 15 to the 30 delta. Like that's not super aggressive. Now you can be super aggressive. You can try to sell options on stuff like Silicon Valley Bank when it was imploding, but that's stupid. Like we would never tell anybody to do stuff like that. That would be really foolish. Um, and we don't tell anybody what to trade. But we would never. We don't trade that way. We don't spend our own money that way. So everything we're doing is stuff we're doing ourselves.
Let's talk about where you tend to focus the option side, because obviously a big part of options trading and yield from options trading is volatility.
Mm-hmm.
So you want something that's got some movement, but not too much movement, where the vol of vol is what kills you.
Yep.
What areas do you tend to like to focus the most on with your own options trading?
So like the indexes. So like QQQ, which is the NASDAQ 100, or IWM.
So you're not doing like individual sectors
No,
or individual positions,
I,
more broad based.
I typically don't. I mean, like there was like I took advantage of when the short report on Square came out. I did sell an option there because like all of a sudden the IV just spiked, right? And I was like, well, this is ridiculous. I don't know if the short report is right or not. I can't speak to that. I think it's very interesting, the point that Hindenburg tried to make. But you saw that like IV spike, and when the IV spikes, it's going to go down at some point. So I did take an opportunity to do that there, but again, I took profits very fast in that trade specifically. So I'm very opportunistic when I see those kinds of things. Should I be more systematic in how I do that? Yeah, probably. But I see like moves in the market that I don't think that makes sense, especially to the downside. And then I like to sell puts against it. But like my normal trading, or like I for example, like Bank of America, like I sold puts on Bank of America. Now I ended up taking those shares at $29, but I'm going to continue to sell options on those until I'm running the wheel on it, which means you sell a put on it, and then you sell cover calls on that until that's no longer until you don't want to hold the equity anymore. I don't really want to hold Bank of America like long term, but I don't think Bank of America is going to get to zero, right? It's going to continue to exist. Bank of America goes to zero, I'm not going to care that I lost money in Bank of America stock. There's like way bigger problems, right? So like,
Well, then your Bitcoin insurance hedge kicks in. And
exactly,
then
right. So then I guess
that's
I
what
win
it is, right?
there. But I mean that's how I thought about like those like couple trades that I made in the last like week.
Yeah, it's going to be, I think, a fascinating way to see how this plays out. So, everybody, I've got another space coming up in about 10 minutes with Dan Niles. Stay tuned for that. I'm going to prep a little bit beforehand. Everybody, please make sure you follow Dave, Uncommon Yield, and, of course, Gary Broad, who, if you don't know Gary, unequivocally should follow him and check out his research. Really, really thoughtful in the way he looks at markets. Please show some support to everybody here and show some support to me in about 10 minutes when I have Dan Niles coming up next. Thank you, David. Appreciate it.
Hey, Michael, as a lot of folks say, it's been exquisite being on here. I really appreciate it. Thank you.
I'm glad it was not atrocious. Thank you, everybody. Thank you, David.
Thank you so much. Bye.
Cheers, everybody.